Hi Matt, how are you today?
I'm all right, thanks, Pete. How's it going?
Yeah, fantastic, thank you, and welcome everyone, and thank you for your patience whilst we got going. Matt, it's lovely to have you join me for this LinkedIn live
Yeah,
as we discuss accounting for the transport sector.
yeah,
Matt, are you able to just sort of introduce yourself for anyone watching, please?
yeah, sure, absolutely. So, as Pete mentioned there, I'm Matt Storey. I'm from a firm called Moore Thompson. I'm actually based in our Spalding office, which is our HQ, but we also have other offices in Market Deep in Wisbech and Peterborough. We've been going for about 80 years. There's 10 partners in total. And a bit about the firm as itself. We do things like your accounts, your tax, your VAT, and your payroll. But we do so much more value-added stuff as well, which we believe is the stuff that our clients really like us to help us with, such as your forecasting, cash flow, succession planning, remuneration, tax planning, advisory, and looking at sort of cloud accounting systems and processes. So there's not a lot that we can't do, really, Pete. But yeah, what we'd like to do is provide that value-added service to our clients.
Good man, good man. Appreciate that. And Martin Jones is watching in. He's just commented hi. So hi Martin, hope you're well. Make sure you put any tricky questions in for Matt. Make sure you put those in the chat ready to go. Oh, hi
Yeah.
Mark as well. Hello to you too. Matt, so just for people watching in, obviously as well as being an accountant, you also support a rubbish football team as well, isn't that right?
Well, I wouldn't say that the reigning champions are a rubbish football team, Pete. I think Man United have had their time in the 90s and the 90s, and I think it's time for Liverpool to regain where they were back in the 80s and 70s. So yeah, bring it on.
Okay, mate. Yeah, we'll stop with that. So I'll let you have that one, right?
Yeah.
So one of the things that I approached you to ask you. So obviously I know you've got a lot of clients in the transport sector as well as we do, and obviously as a professional provider to the sector, I wanted for us to be able to explore sort of what the accounting looks like and good accounting practice looks like in the sector. So is it okay for me to just dive in for a couple of questions with you?
Yeah, of course
okay,
it is. Yeah, that's fine.
So
yeah.
first of all, one of the things is when a company wants to purchase a new truck or a trailer, what sort of purchasing options are there for people?
Yeah, I would say there's probably three options for you. You can buy it outright, so you can use it from your existing working capital. So it's just a straight cash purchase. Next option is probably buying it what's called on hire purchase. So effectively, you effectively own it, but you're using finance to help purchase that asset. And usually the terms are sort of over sort of 3-4 year periods. And then the last option is actually on what's called an operating lease. So that's to hire the asset. So you pay a monthly fee for that item, but you don't actually never own it.
Okay. Yeah, fantastic. And with regards to those options, so that can seem like probably a bit complicated. What are the sort of practicalities of each of those options? So what are the practicalities for purchasing a vehicle outright, for example?
Yeah, so sort of the practicalities there is that if a company has a large amount of excess cash, which was quite a nice problem to have, to be fair, if it sticks out in the balance sheet, then the shareholders potentially got an inheritance tax problem. To explore a bit further into that, usually ordinary shares and unquoted companies attract 100% business property relief. But with an excess cash balance, HMRC would argue that cash balance wouldn't qualify for the relief. So if you can remove that excess cash, you remove the IHT problem. So that is a good reason why you might want to purchase that outright with your cash. Obviously, the disadvantage of that is that you might want to use that cash for something else or to save it for a rainy day, obviously with these uncertain times. So alternative to that, if effectively you want to look at cash flow, then HP might be the route for you. Effectively, HP, you still own the asset. It's just that you're paying for that asset over, let's say, a 3-year period. So you make capital repayments plus a little bit of interest. But both choices that you've got, advantage, disadvantage, you are committed to keeping the truck, but you can claim all the VAT up front. And the tax advantage of actually owning these items via the outright or HP is that they would qualify what's called the annual investment allowance, which is currently £1 million. So what that means is that you have got up to £1 million, which you could knock off your taxable profits.
Okay.
So if you've had a really good year, and you know you're going to have a good year before your year end, if you go and acquire these trucks, which can be quite a substantial amount of money, you could get a generous deduction off your tax bill. And this could generate losses, which you could either carry back into the previous year and get the tax back you paid in the previous year.
Okay,
so
excellent.
There's good reasons there.
Yeah, good to know. What about hire purchase then? With
the operating lease, Pete. Yeah, so the operating lease is kind of non-committal because you're renting the lorry or the truck, so you don't actually own it at the end of the agreement. But it does help cash flow because it's lower repayments to HP, because it works out what the residual value is going to be over, in 3 years' time. So that doesn't qualify for the annual investment allowance, but the rentals that you pay are tax relievable. And you can also claim the VAT on each repayment. And then the obvious question I do get is, Matt, which is the best one? And it so depends on the circumstances of where you are. But I do commonly see that a mixture of HP and operating lease is kind of the option. Some people like to have an asset they own, which is why the HP, but because of the change in the types of trucks and they get better and better, then someone say, well, it's best to me have an operating lease so I can replace it every 3 years. So like I say, no best answer. I think it really depends on the circumstance of the business.
Of course, yeah, horses for courses. Yeah, apologies for getting my HP and my operating lease mixed up there. that probably threw you for a moment then. So apologies about that. I remember when I used to work for Volvo Trucks. Obviously, we got involved and we had to do a lot of the financial training and what have you to make sure that we could give proper advice and what have you. And you always sort of get asked that question, what's the best what is the best solution? And it really is, a lot of people say, why buy something that depreciates in value? Well, obviously there are benefits to that, aren't there? Whilst we're talking about sort of tax advantages of purchasing trucks, what other tax planning tips could you give to a haulage company?
Yeah, sure. And this isn't exclusively for a haulage business, but haulage business can take advantage of this, is that the company could make pension contributions on behalf of the directors. So a lot of the businesses the shareholders and directors are the same person, and the advantage of that, it can be treated as an allowable expense, and you get your tax relief on that. And at the same time, the directors are effectively taking money out of the company tax free, because when you make a pension contribution, there's no tax or NI to pay. It must be wholly exclusive for the purpose of business, and what I mean by that is that when you look at your salary and dividends and your pension contribution, it must be sort of in line with other directors in similar positions. So there's a 40k limit per director each year that you can make contributions for. And also, if you haven't made contributions in the previous 3 years, you could potentially utilize them as well. So effectively, you could make 160k contribution in the year, which gives you a tax deduction, and you're taking 160k out of the company tax free.
Amazing.
Some other ones that I've got here. I mean, there's quite a few, but I will be here all day, Pete. But there's a few other ones that you've got here. Is that, in terms of taking money out of the company, which I touched on there, the most tax efficient route is your standard low salary, high dividends, which I think a lot of businesses take advantage of. But for example, if a shareholder wanted to take more than 50,000, which is like your cut-off point for basic rate tax, then they're going to be paying tax at 40 or 32.5%, depending if they're taking salary or dividend. So one option they have is that if they've got a spouse who potentially has a little bit of involvement in the business and isn't taking a lot of income from other sources, then they could utilize their basic rate tax band and transfer some shares to them as well, and vote some dividends via them. The beauty of that is that when you transfer shares to a spouse, it's exempt from capital gains tax. And if done right, it can save you up to 25% in tax.
Amazing.
And then just the last one I'm just going to bring in, because it's Christmas, and I imagine there isn't many Christmas parties this year, because of where we are in the pandemic, everything else. A little one that I'm getting asked about recently, which I think I've mentioned to you, Pete, as well, is the trivial benefits rules. And it's basically giving non-cash consideration to employees of £50 each, which is a good substitute for like a Christmas party. Condition is it mustn't be for a work-related consideration. So it must be for like a Christmas, it must be New Year, it must be for a birthday or work anniversary. And the beauty of that £50, you get a tax deduction for it. There's no tax on the employer, and you can give as many of those £50 to employees as you like. It's unlimited. As long as it's an occasion which is not work related, you can give as many £50 gift vouchers to each employee as many times you like. The only limitation is if the employee is a director, there's only 6 occasions that you can give that £50 gift voucher. So a maximum 300 a year, but that's quite obviously not as high tax saving as what we talked about before, but it's still quite a nice little gesture. Cool. And you're sort of cheating the tax man a little bit as well, which is always nice, isn't it?
Of course. Excellent. So with regards, you mentioned sort of structures, can you advise on any structures for a haulage business?
Yeah, sure. I think the most obvious route, which a lot of haulage companies are, is running through a limited company, because there's probably a whole lot of high risk, there's a lot of high value assets, not high volume trading. But probably something you maybe not have thought about is having a holding company, an additional company to your trading company. Now, you might ask, what's the point of that, Matt? Now, the point of that is that the holding company could hold, let's just say, the company yard or the fleet of trucks. They would effectively own them, and they would basically charge the trading company a hire effectively for the trucks, and a hire for the users of that yard. Now, obviously, we're going through uneven times, and things are tight, and bad things can happen, and that trading company could go into some difficulty, and worst comes to worst, there might be some kind of form of liquidation. Now, the beauty of having that holding company, as long as there's no loan between the subsidiary and the holding company, the liquidators can't touch the assets in the holding company because they're not owned by the subsidiary. So it's just a really good way of protecting the assets away from any adverse conditions that happen in the future.
Okay.
I mean, the other thing as well of having this type of setup is that it gives you the opportunity to invest in new business without affecting the other businesses. So if, for example, you wanted to go into other sectors of the haulage business, but you don't want to impact on your existing trade, you can set up subsidiaries up to that holding company, and you can monitor that business on its own, and it has no interference with your existing trade.
Fantastic. With regards to financial system for transport business is important. What would you recommend for this as like a financial system, Matt?
Yeah, sure. I think I would say that most businesses out there have got some kind of computerized bookkeeping system, and to be fair, that is the way to go. I think the days of Excel spreadsheets and manual records have gone because they take too much time. I think the important thing, if you've got a computerized system, is get the best out of that system and make sure that you utilize everything that you can out of it. I'm sure there's some systems out there which has all singing and dancing, but there may be half of it which isn't relevant to your business. So I think the important thing is to get the best and the most out of your system. At the minute, I would say a cloud-based system such as Xero is a really good one to have at the minute, because as long as you've got an internet connection, you can maintain that records any way you like, which is really important at the minute because a lot of people are working from home because of the pandemic. So having a cloud-based system means that you are flexible and you can work from anywhere you like as long as you have that internet connection. So the advantage of these cloud products is that a bank feed can be generated in the system. So there's no actual manual entry of the bank transactions. So what that means, it just feeds on a daily basis all the transactions that hit the bank. Also, you could use what's called data capture software, something like Receipt Bank, which means that you can scan the invoices into the system, which catches all the data on there, allocated to the correct nominals, and the correct amount of VAT can be claimed. Basically, all saving lots of time. And basically, a combination of inputting all the invoices to the transactions means everything's reconciled, and it's really nice and neat and cost effective. And also the beauty of the cloud system, there's a lot of extra things that you connect to it as well. To take it further, you could get some debt collecting software, which means you can send automated emails and contacts to your customers. So rather than sort of spending time on the phone chasing, it does it automatically for you. Other thing as well, again, really important because of the pandemic, you can get some forecasting apps to there as well, which will generate from the system the figures from your Xero system, all help to make better decisions for the future.
Amazing.
And as well as that, you might have an existing CRM system which can link there, a sales invoicing system, and also other haulage platforms which you might use for tracking of trucks, which could also link to your Zero system as well. So there's a lot of potential, Pete, having a cloud-based.
Brilliant. And obviously, I suppose the benefit of that is having real-time reporting functions as well.
Absolutely.
Yeah, so I guess that's one of the things we benefit from having a cloud system. What sort of reports can be run from that?
Yeah, sure. So I would say like a basic management accounts, which would be the monthly system. So that's really great because, you know, back in the day, people would just get their figures from their accountant. It's historic. It's probably 6 months old. It isn't going to help you make very quick business decisions. You know, you're probably going to be too late. So having these monthly management accounts, it helps you make these decisions more quickly. I mean, the profit and loss, as it says, it shows whether you're making profits or making losses, you know, as simple as it is. But you can also monitor the costs as well. If you can see on a monthly basis that costs are rising, there might be some issue there, you know, might be some deficiencies that you might be able to look into. You've also got your balance sheet there, which is a snapshot of basically what you owe and what you own. So you can see if you've got sufficient assets or cash to help meet your outstanding liabilities. Excellent. So also what you got there as well, helps do your forecasting, which I touched on there. So you can do your forecasting reports and budgeting, and you can help compare this to your actuals. So if you've got a forecast and actually they're really deferring away from your actuals, you can sort of re-budget and look at reasons why are deferring from your financials. And the other thing as well, I'd just like to add as well, Pete, is that you could potentially look at the profit per customer, to see if you're maximising your work in there, and look if you're making money on your contracts, and also look at your profit per services, because there might be certain services that you're offering which actually are not very profitable. And if that's the case, you perhaps want to be focused on other area businesses which do make you money, and maybe sort of look to some of them services redundant if possible. Yeah,
of course. Okay, so one of the things that I try and help do when we go in and support transport companies is to have a look at useful measures that we can implement to try and support business being done in a better way. So to that end, what sort of KPIs do you see commonly? Because I see quite a vast difference between different transport operators as to what they actually look at and measure. So what sort of KPIs do you see typically with your haulage firms?
Yeah, sure. I mean, like you said, there's quite a lot out there, and I don't think there's any right or wrong answer. But I would say some of the common ones is that you've got your standard ones, which I'd say is a fuel as percentage of sale, or a labour as percentage of sales, and like profit margins on your subcontractors. But so there can be some really specific ones out there as well, where like you could look at the total mileage driven by a truck compared to the actual mileage charged to customers, which help your efficiencies there. Look at the miles per gallon per truck, and I would say that a good truck is probably about 10 miles per gallon. Have a look at you stood down days. So I sort of looking at the number of trucks in your yard that's not being used. You know, it could be that you potentially got not enough trucks, or you've got too many. And I think some aim for about sort of less than 15% per day, mainly. And also looking at things like the average miles driven as well. I mean, there's quite a lot really, and I think the best thing you do, it's all business specific, but I think these will help a lot utilize your trucks and your fuel and labour most efficiently, and basically help you decide whether you need more labour or more trucks or less trucks. So all really helpful, them ones.
I think from a fuel calculation, I know that's hugely important for a lot of operators. Sort of 30% of OPEX is on fuel, and you can see the fuel consumptions vary hugely dependent on the vehicle, dependent on the driver, and obviously the operation as well. Some of the more arduous work can be low single digits, and some of them can get into double digits, you know, depending on how arduous that work is. So part of that leads me sort of well onto the next question, and one of the things that I have to do as part of, from a compliance point of view, one is sort of managing the vehicles, and the second is sort of managing driver performance. Is there anything worth considering with regards to driver monitoring and monitoring of drivers?
Yeah, I think one of the topical things at the minute is the status of these drivers. I don't, you know, just to make people aware, there's these off payroll working rules. They were supposed to come in from April this year, but because of COVID and everything else, it's been deferred to April 2021. Basically, what that means, if you're a medium-sized limited company, it's the business's responsibility to see whether that business should be taxed as an employee or not, and that's even if the driver is operating for a limited company. So if it's found that they are an employee, then you would have to tax them as PAYE and NIC as an employee. Now, to help you determine whether they meet the condition of employee, and this is obviously the responsibility of the company, so it's important that you get this right. You have to look at various factors, and some of these factors would include who has the control. Is it them or is it the employer? Who controls when the work's done and where it's done? Can that contractor provide a substitute to do the work? So obviously there's one person operating for a limited company. If something happens to them, can they supply a replacement? Do they supply their own truck? Or is the employer supplying that to them? In terms of payment, are they getting an hourly rate? Do they get paid for overtime? Do they get sick pay? Or do they just raise an invoice? Is there a long employment relationship? If the intention that it is, that might be seen as being an employee rather than just a contractor. Are the contractors obliged to accept the work? So if an employer says you must do this, have they got the chance to say no, I can't do that? Have they got the obligation to accept it? And basically, who has the financial risk? If anything happens, is it the risk of the company or the contractor? So not an easy. It's a case by case scenario to decide, but it's quite important because the employers could get unstuck here and be found to doing something wrong, and HMRC could be on them. So, but I must stress it is for medium companies at the minute. But there is obviously the IR35 rules, which has obviously been banging around for quite a long time, which will affect the small companies of these drivers operating through these companies, and they still need to decide whether they should be treated as an employee or not. So although that's not the responsibility of the business, the drivers still need to be aware of that.
Got you. Yeah, fascinating. It's awesome stuff, Matt. And I think there's going to be a lot of uncertainty, particularly with Brexit coming up as well, and with other. We could probably have a whole different session on Brexit, but
I think you could, yeah. Which is probably why I've not really touched on it today, because there's quite a lot of lots of stuff that go, especially with the haulage side. If you're traveling overseas,
particularly self-employed drivers, that's a real warning now, isn't it? And if any operators want to get in touch with you, Matt, how would they find you?
Yeah, sure. So, I'm quite happy if they want to just send me an email. My contact address is matthewstory@morty.co.uk. Contact on our sort of office line, which is 01775 711 333. And obviously then we've got our website as well, which is the www.morethompson.co.uk. So there's various avenues they can get hold of me. If you look on the More Thompson website, there is a page dedicated to myself. And if you wanted to make an appointment, there is my diary on there, and you can always make an appointment through me through that.
Amazing. No, that's spot on, mate. So yeah, and if anyone wants to get hold of Matt, you can get hold of him through me as well. And Matt supports us with our accounts and what have you as well. So yeah, and I can thoroughly recommend you. So well done, Matt. Thank you very much. And thank you for those that have listened. I hope this has been valuable. I hope it's given you some things to think about, and obviously give us a shout and look forward to catching up with you all soon. Anyway, thank you very much, Matt, for joining me.
Yeah, not a problem, Pete. Pleasure.
Take care. Catch you soon.
Yeah, take care. Cheers. Thanks for that. Bye now.